Hello, and welcome back to your next installment of the Accelerated Investor Program with me, Warren Jeffrey. In your last lesson, we covered how you go about opening your own brokerage account. Now, in step 5 of the program, I'll be showing you how you can take charge of your investments and grow your 100,000 Rand into 1 million. To do this, you need to build a portfolio, or a mix of different investments, with a specific combination of shares, property, precious metals, preference shares, bonds, and cash. And over the next few lessons, I'll show you the exact mix of assets you need to grow your portfolio from 100,000 Rand to 1 million Rand. Today, we'll start with the first slice of your million Rand portfolio pie, explosive growth shares. At the end of this lesson, you'll know exactly what explosive growth shares are and how to pick them. We'll allocate 15% of your 100,000 Rand, that's 15,000 Rand, to these type of shares. So, what do I mean when I say explosive growth shares? The explosive growth shares are the smallest shares on the market. They are the companies outside the top 40 biggest shares. They are companies that have a total value of less than 30 billion Rand, and they are the up-and-coming shares that will deliver the really big gains. And that's why you want them in your portfolio. So, to help you do this, I've invited small cap investment expert and editor of Red Hot Penny Shares, Francois Jabert, to join me today. Francois will reveal to you his 3 hot tips for spotting the explosive growth companies that will deliver growth and returns you're looking for. For those of you who don't know Francois, he's a seriously accomplished investor. He's used his business analytical and methodological engineering skills to bank multiple triple-digit returns time and time again. You may have seen him on CNBC or read his column on the Money Morning. Francois is also the editor of South Africa's leading small-cap investment publication, Red Hot Penny Shares. And with some of the stunning gains he's returned for subscribers within the last year alone, including a 130% gain on gold miner DRD, a 94% gain on telecoms equipment company PhoneWorks, and another 94% gain on Pointing. It's clear Francois knows what he's doing when it comes to investing in explosive growth shares. So, let's get you started and take your 100,000 Rand to 1 million and more. Francois, welcome, and thanks for joining us today.
Thank you, Warren. Today I'm going to show you how 3 simple ratios have helped me successfully pick and grow my personal share portfolio 8-fold in 3 years. One of the great things about these smaller companies is they're small enough to do a proper analysis of the company and get a good understanding of how it works and its potential. I like to look at the hard facts when analyzing a company. And by looking at these facts, you're able to find companies that present you with a good value investment. So what should you be looking for? You want to look for a share that's selling for less than it's really worth. To do this, you want to look at what real assets of the company are worth. Then you divide the share price by this value, the net asset value or NAV. This is called the price to book ratio. If the share price is lower than the actual assets of the company, then the price to book ratio will be less than 1. This is your first indicator that you're onto a winner. At the time of this recording, Eqstra was a good example of this as its net asset value was 6.91 Rand, while its share price is trading around about 6.20 Rand. That put the share price on a price to book ratio of 0.904. This indicates Eqstra as a potential value opportunity as it's trading at a big discount to its net asset value. The next consideration you have to look at when scouting for a value opportunity is to find a company with profit levels that are higher than the market average. To do this, you can divide the share price by the company earnings per share. That's the amount of money the company makes a year, divided by the number of shares that the company holds. This will give you a ratio referred to as a PE ratio. And in general, the lower this ratio, the better the investment opportunity a company presents. Again, Eqstra is a good example of a share with a low PE. Its PE was 6.97 at the time of this recording. This is well below the market average of 16 and it's above 3. As an extra investment safety measure, I like a company's PE to be above 3, so as to avoid companies that are not making sustainable profits. The final thing I look at to spot a good investment is to look at the debt levels of a company. If a company owes too much money, its growth is vulnerable to changes in interest rates and other market conditions. So in general, you want to invest in a company with low levels of debt. A great way to identify this is to look at interest cover ratio. This ratio shows you how many times a company's profits could pay its interest payments. I like to look for a company with an interest cover ratio of 1.8 or more. Looking once again at Eqstra, it had an interest cover ratio of 2.01. This means its profits would cover its interest payments by more than double. And this tells you the company has a manageable level of debt. So, by analysing these three factors of any potential explosive growth company, you'll give yourself the best chance of finding a winning share investment. In fact, these are some of the very same factors that make up the key elements of my personal share selection strategy. My penny share power strategy. I use this strategy to find shares with truly explosive profit potential, so I can help my readers double their money on at least one share in 12 months or less.
So there you have it, exactly what you need to look at to find winning explosive growth share investments. 1. Is the share price lower than the NAV? Use the price to book ratio for this. 2. Is the company's profit larger than the market average? Use the PE ratio to answer this. 3. Does the company have low levels of debt? Use the interest cover ratio to determine this. Now, I'm sure some of you would love to learn even more about Francois' proven share selection strategy and how it works. Well, you're in luck. You see, Francois details everything you need to know about buying a share and how his strategy works in his Investor's Toolkit. You can learn more about this toolkit by simply clicking on the link at the end of this lesson or by going to your resources section of this website. To take your 100,000 Rand to more than $1 million, you need to allocate 15% of your portfolio to explosive growth shares. This is crucial to inject some rapid growth into your investments. If you want Francois to help you select these shares, take a look at his Red Hot Penny Shares service. This is just the first slice in what will ultimately become your $1 million Rand portfolio. Thank you so much for joining us today, Francois. I have no doubt everyone can apply your insights and tips to their investing strategies. To view a list of some of the shares that fulfill Francois' top 3 requirements for an explosive growth share, visit the resource section of your online classroom. You'll find a list of explosive growth shares updated quarterly. In the next lesson of the Accelerated Investor Program, we'll take a look at how to identify the only blue chip shares you want to own. So, make sure you join me then. Here's to staying ahead of the game.